Hey everyone, welcome back to Corporate Decoder, the place where we break down the opaque world of corporate finance and reveal the hidden stories behind the numbers. Today we're diving into a massive shareholder report from Fidelity Commonwealth. Trust a document packed with details about the Fidelity Nasdaq Composite Index, ETF, a fund tracking a major stock market index. This is the annual report for the period ending the 30th of November 2025, and it tells us what happened with this exchange-traded fund over the past year. We'll look at how it performed, what it invested in, and the financial health of the fund. Now, before we get too deep into the numbers, remember past performance is never a guarantee of future results. Markets can be wild, unpredictable things. So what moved the needle for this fund this period? The report highlights a strong year for us equities, broadly speaking. Information technology stocks were a big winner, especially in areas like semiconductors, which definitely helped this fund, which is designed to track the Nasdaq Composite Index and index heavy on tech. Communication services also outpaced the market. On the flip side, industrials and real estate sectors were a drag on performance. Looking at specific companies, the report calls out big players like Alphabet, which is Google and Broadcom, as major contributors to the fund's gains. On the downside, Adobe and some media and entertainment stocks were notable detractors. Let's talk about what the fund actually holds. As of the 30th of November 2025, the vast majority of the fund's assets, over 96%, were invested in the United States. The biggest chunk, a whopping 51.4%, was in information technology. Communication services came in second at 16.3%, followed by consumer discretionary at 13.6%. These three sectors alone make up over 80% of the fund's holdings, which shows you how focused this ETF is. Most of the fund's investments are in common stocks, with almost 100% of its net assets in this category. This means it is heavily invested in the stock market. The top 10 holdings give us a clear picture of the fund's core bets. Nvidia Corporation is the largest holding by a good margin, followed closely by Apple Incorporated and Microsoft Corporation. Amazon.com Incorporated, Broadcom Incorporated, and Alphabet Incorporated Class A and Class C also feature prominently. This concentration in a few mega-cap tech companies is typical for a Nasdaq tracking fund, and it means their performance is very closely tied to the fortunes of these giants. Digging deeper into the sector allocation, we see the tech dominance information technology at 51.4% is followed by communication services at 16.3% and consumer discretionary at 13.6%. The other sectors like healthcare, financials, industrials, consumer staples, utilities, materials, real estate, and energy represent much smaller portions of the fund. It's clear this fund is built around the growth potential of tech. Now let's look at the financial statements themselves. These are the heart of the report, and they show us the financial health and performance of the fund. Keep in mind this is an ETF, so its performance mirrors the index it tracks. As of the 30th of November 2025, the fund held investments valued at over $9.5 billion. The vast majority, over $9.3 billion, were in common stocks. The fund also had significant holdings in money market funds, totaling over $274 million, which acts as a buffer and provides liquidity. The statement of operations shows us how the fund made and spent money over the year. Investment income, primarily from dividends, was about $52 million, with additional income from Fidelity Central funds. Expenses were relatively low at around $16.7 million, which is impressive given the fund size. The most significant part, however, is the net realized and unrealized gain or loss. For the year ended the 30th of November 2025, the fund saw a massive net gain of over $1.6 billion. This is driven by the significant increase in the value of its underlying investments. This statement shows how the fund's net assets have changed over time. For the year ended the 30th of November 2025, the fund experienced a substantial increase in net assets of over $1.9 billion. This is a result of strong investment performance and new money coming into the fund through share purchases. Looking at selected per share data, we can see the net asset value per S-share at the beginning of the period was about $75.75. By the end of the period, it had grown to nearly $92, representing a significant increase. The total return for the year was an impressive 22.20%. This shows a solid performance over the year. Keep in mind though that the expense ratio remains very low at just 0.21%, which is a positive for investors as it means more of their returns stay in their pockets. The notes to the financial statements provide crucial context and explanation for the numbers we've just seen. Most importantly, they detail how investments are valued. Equity securities for which market quotations are readily available are valued at their last trading price, which is known as level 1 input. For securities where prices aren't readily available, they use more complex methods categorized as level 2 or level 3 inputs. For this fund tracking a major index, most of its investments likely fall into level 1, making their valuation straightforward. The fund also uses derivative instruments like futures contracts to manage risk and potentially enhance returns. These are complex financial tools that derive their value from underlying assets. The primary risk exposure for this fund is equity risk related to market price fluctuations. While derivatives can offer benefits, they also introduce additional risks like liquidity risk and counterparty credit risk, meaning the risk that the other party in the contract might not fulfill their obligations. The management fee paid to Fidelity Management Semi-Amp Research Company LLC, the investment advisor, is 0.21% of the fund's average net assets. This is a very competitive rate, especially for an ETF that passively tracks an index. The report also mentions Geode Capital Management LLC as a sub-advisor. Looking at this report for the Fidelity Nasdaq Composite Index ETF, what is the big picture? Clearly, the fund has had a fantastic year, mirroring the incredible performance of the Nasdaq Composite Index itself, driven by its heavy allocation to top-tier technology companies. The concentration in Nvidia, Apple, and Microsoft is both a strength and a risk. When these giants soar, the fund flies, but if any stumble, it can drag the whole fund down. The low expense ratio is a definite plus for investors keeping costs down. The report also highlights how the fund uses derivatives to manage risk, which is standard practice, but also introduces its own set of complexities. For investors in this fund, the story is pretty straightforward. You are betting heavily on the continued growth and dominance of a few mega-cap tech companies. The diversification within the tech sector is decent, but the reliance on just a few key players is what makes this ETF perform the way it does. The fund has performed exceptionally well, but an investor needs to be comfortable with the inherent volatility associated with such a concentrated strategy. So what are the key takeaways here? This fund is a pure play on the Nasdaq's largest tech names. Its performance is directly tied to their success. The low fees are a win. The risks are primarily concentrated in the tech sector and the performance of a few giants. Alright, that is our breakdown of Fidelity Commonwealth Trust's latest report. What is your take on these numbers and what they signal for the future of this ETF? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate finance. And for even more exclusive content and to connect with other finance enthusiasts, be sure to check out our Discord community linked in the description. Thanks for watching, see you next time.